Hi there, this is Aubrey Chauke. I'm a tutor for accounting, business studies, EMS, as well as research. If you're watching this channel, you're definitely at the right place. Please don't forget to click the subscribe button right on your bottom right, and also click the notification bell so that you can be updated each and every time I am online. With that being said, let's continue with the lesson of the day. Today we're going to be focusing on how to calculate cost of sales using the periodic inventory system. From the information that we are given, we are told that Baloyi Bookstores is a business that sells books to learners at Hammanskraal University of Technology. The financial period starts on 1 March 2022. And they're saying that the business uses a periodic inventory system. Using the information provided below and the opening balances given, calculate the cost of sales for the period ending 28 February 2021. So once we give them information like this, we need to establish certain things first. We need to understand what exactly are we supposed to do. Okay, now on the information, they are saying that we should calculate the correct cost of sales based on the information that they have given us. We need to do what? Calculate the correct cost of sales. Okay, and then from there, they're telling us that this business uses a periodic inventory system, meaning that this business updates their cost of sales at the end of a particular period. Like, for example, maybe at the end of the month, or at the end of the quarter, or at the end of the year. It will depend on what they've said to us. Okay, so we know that with what we've been given, we are required to calculate the cost of sales, and all we need to do is to check the transactions that are given so that we can get to understand what are we expected to do with the information that we're given. And they're telling us that this business that we're going to calculate the cost of sales for is actually selling books at Hammanskraal University of Technology. So we are looking at something like a bookstore, that sells books to the learners. And then we need to be able to compute or calculate the correct cost of sales using the periodic inventory system. And then another thing that we also need to be able to establish is the beginning of the financial year. Okay, we know that our month year, or the beginning of our financial year, is supposed to start on 1 March 2020 to 28 February 2021. So once you have established the financial period, you're almost a step ahead. You've already established one of the most important elements in accounting. And then from there, on the information that we are given, we are told that the following other balances of the business for the period ending 28 February, and then we know that 28 February 2021, it's at the end of the year. This means that anything that is given to us on these balances that is not written the date, we should assume that it's at the end of the year. Okay, now on the information, we're already given the opening inventory. The reason why I'm saying as opening inventory is because of this 01 March 2020, which suggests that this is our opening balance for the inventory. Okay, and then so we need to be able to work on the dates that we're given to be able to get what we want. So we already know that our opening inventory is 100,000, so we might as well go into the formula sheet and plug in that 100,000. So we know already that our opening inventory here, it was actually supposed to be 100,000. This amount was written by mistake. It was supposed to be at the top. So we know already that here our opening inventory is supposed to be 100,000, right? So we already know opening inventory 100,000. And then now in terms of these other things like purchases, we may want to open the brackets so that we can be able to show the workings inside the brackets. Okay, and then we were also given the closing inventory. We were told that the closing inventory is 50,000, which means this is the stock that was remaining at the end of the year. Okay, and then so what we need to do is to take this closing inventory to the calculation that we have. We have to check first if there's any return that was made during the year. And then they're saying that stock to the value of 250,000 was purchased in cash, and the stock worth 70,000 was purchased on credit during the year. Okay, and then the next transaction, carriage on purchase amounted to 7,000, import duties amounted to 15,000. So you can already see that based on the information that we're given, there is nothing said about us returning the products back to the supplier. So we might as well want to plug this closing inventory. Remember, if it's closing inventory, this means that this is the stock that is remaining on 28th February 2021. So this is the stock that we are left with at the end of the year. And obviously, because in terms of cost of goods sold, we are trying to look at how much it has costed us for us to sell certain goods. So any inventory that is left, it means it has not been sold, which is the reason why we will have to subtract it on our formula. And then now the basic calculation for this cost of sales transaction says you're supposed to take your opening inventory, add it to your purchases that you've made during the year. If there were any returns that were made during the year, you must subtract them. And then if you incurred any carriage on purchases or transport expenses with regards to being helped to transport the stock, you must take that into consideration. So we need to check that if we have anything like that, and then this will increase your costs for the stock. And then you must also check where we charged any import duties. Like for example, if you are buying from another country, you will normally be expected to pay custom duties. Custom duties are also known as import duties, so you may want to take that into consideration. Okay, and then now we're gonna go to our formula and check what we're given. Remember, on the information already we were told about the closing balance, and then they said that the closing balance or the closing inventory is 50,000, which means that this 50,000 has not been sold. So it will not make sense. It will not make sense for us to say that we have sold this stock while this stock is remaining, which is the reason why on the formula this stock it's subtracted, because this is the stock that is physically remaining. This is the stock that was not sold. So we're going to have on the closing inventory part, we're going to have 50,000 in brackets because this stock was not sold. Okay, and then with that being said, let's continue to just check if there's anything that we will need to use. So already we have dealt with this part, that this has been taken into consideration, and also this one. So this means we are only left with the information that is from the transactions that occurred during the year. And then on the information, they're telling us that stock to the value of 250,000 was purchased in cash. Okay, now the keyword, purchased in cash. So meaning that by the time we bought that stock, we gave them 250,000 cash. Okay, so we need to record this part, the first part, 250,000 as part of our purchases that we made during the year. So here you're gonna open a bracket like I did and say 250,000, and then you say plus. Maybe let me erase this so that it can be clear. You're going to say plus because our purchases are supposed to increase, and we know that it's 250,000 plus a particular amount of the purchases that were also made on credit. Remember, whether you bought something on credit or you bought it cash, at the end of the day, what matters is you bought that thing, you bought those items. So on the information, we are told that and the stock worth 70,000 was purchased on credit during the year. So it means that we bought 2 times. We bought stock for 250,000 on cash, and we bought a lot of goods on cash for 250,000, and then we also bought an additional stock of 70,000 during the year. So what happens is that this will increase our purchases account. Remember, when you're using the periodic inventory system to calculate the cost of sales, it means that when during that particular period you will be operating on the purchases account, because the cost of sales is updated at the end of a particular period, which I said before that it can either be a month, it can be a quarter, year, depending on when do you want to update your cost of sales as a business. So during that time when you're making purchases, you record the information about the purchases in the purchases account, which is why we have purchases here. Okay, so we're going to add 70,000 to this 250,000. So we're going to say plus 70,000. And then this transaction will then be complete because there was nothing else that was purchased. So we have dealt with this part 70,000, and then we have also dealt with the 250,000 for cash purchases. So it means in terms of the purchases account right now, we have taken into consideration every information that we were given. So we're gonna have to add what we are given to get the total. So if you say 250,000 and then you add plus 70,000, you're going to get, I'm getting 320,000 here. So this means that our total purchases for that particular period were amounting to 320,000. Okay, so you're going to write 320,000 here as part of your total purchases. So this means that the purchases that were made during the year, at all of them amount to 320,000, which is the sum of 250,000 plus 70,000, which gives us 320,000. And then from there we're going to go to our information and check what is it that we are also given. On the information, we are told that carriage on purchases amount to 7,000. This means that this is what you were charged for transport, for them to transport those products that you've bought to your store. So it means carriage on purchase will increase our cost of sales expense. So we are supposed to add it to what we have. Okay, so here we're also gonna have carriage on purchases, which is, I think it's 7,000. This is how much you were charged for transporting the stock within the country. So it's 7,000. Okay, and then now we're also gonna check on the information. What else do we have? So we've dealt with this part. We've dealt with the 7,000 for carriage on the purchases that we've made. And then from there we also have import duties. Import duties are charged when you buy or when you import goods. When you're buying goods from overseas, you'll be charged import duties or custom duties. Remember, you are bringing goods from a foreign country into the country that we are in. So this means you're not buying local. So if you're buying outside the country, you have to pay custom duties, and in this case our custom duties are amounting to 15,000. So which is what we're going to also add. This 15,000 is also increasing our cost of sales. Okay, so we're going to also add 15,000 here, and then from there what we have to do is to just add everything that we have and then get our cost of sales. So this means here we will have you can just write cost of goods sold. Okay, And then remember that the reason why we are subtracting this 50,000 is because this was the inventory that was remaining at the end of the period, meaning that this inventory was not sold at the end of the period. Okay, so we're going to say 100,000 plus 320,000, and then we add plus 7,000, we add plus 15,000, and then we minus 50,000. According to my calculations, our cost of sales is going to be 392,000. 392,000. I'm going to do some confirmation just to check if what I've written is right. So 100,000 plus 320,000 plus 7,000 plus 15,000, and then minus 50,000. So I'm getting I think it's also important that when you are done typing everything on your calculator, just verify if everything is correct. Okay, and then I'm still getting 392,000, so I'm going to do for the last time 100,000 plus 320,000 plus 7,000 plus 15,000 minus 50,000. I'm still getting 392,000. This means that this is our cost of goods sold. So when you show this on a T account, you're going to do something like this. Your T account will be like this. You're gonna have cost of sales, and then your cost of sales account here, it will have to be debited by inventory, and then you have 392,000. Okay, so this is how it will be shown in a T account format. And then remember, each and every time, the reason why I'm saying this account will be debited by inventory is because remember that each and every time you are selling goods, stock is leaving. So each and every time we are selling, the stock is affected by debiting cost of sales, and then as crediting inventory. The stock that you are having in the storeroom, each and every time when you sell, gets reduced. So that's why here we have cost of sales being debited, because cost of sales as an expense is increasing, and the inventory that you have in the storeroom is reduced. And we know that inventory is an asset, and inventory as an asset is reduced on the credit side, and expense, cost of sales as an expense, it increases on the debit side. So which is why we have debited cost of sales. If you have any comments that you want to make about this lesson, or any suggestion that you want to make, please make use of the details that will follow at the end of this lesson. In the meantime, I'd like to wish you well for your exams, and if you have a brother or a sister who's doing grade 10, grade 11, this will be beneficial for them. Please encourage them to watch our lessons, and while you are at it, please don't forget to subscribe to our YouTube channel by clicking the subscribe button that is on your bottom right at this moment. Or if you're watching this somewhere, please subscribe to our YouTube channel at Aubrey Chauke. Don't forget to click that red subscribe button. If you don't click it, it's gonna be very angry, so you might as well just have some communication with that red button, make it to smile, and then also click that notification bell so that you can be updated each and every time I am online. My name is Aubrey Chauke, and I'm a tutor for accounting, business studies, EMS, as well as research. Thank you for watching this lesson. Stay blessed.